A lot of businesses believe that finance is their main hindrance towards either starting or growing their businesses. But on the contrary, also, finance is one of the topics which most business owners fail to clearly understand and clearly implement the practices required. In this short video, we're going to look at the key sources of finance for starting and growing your business, and a key focus towards the Kenyan market. So first of all, the main source of starting a business is clearly personal savings. Since businesses are generally looked at as high risk ventures, very few external people are willing to commit any significant funds towards a business which has yet been started or has yet received a commitment from the person starting this business. And a lot of people get stuck on that first step, since the argument is that you already have the lack of capital to start the particular business. So one of the best ways to tackle this problem is through entering a business where you already have existing experience, and you can be able to start through sourcing products through an existing service provider. So let me give you an example of this. Let's say you want to start a business selling clothes. For you to clearly understand all the factors of these businesses, your first hindrance is getting the stock or getting a location for you to run this particular business. So in the event that you can't get a job opportunity where you learn about this market in that specific business, the best way is through partnering with someone who has an already existing business. And the way you partner is not through shares, but through a business to business transaction. So the first customer is this supplier. So you have to sell them on the idea that you'll be able to source clients and they can give you the goods at a discounted price, or you can work as their agent. That's simply an explanation or rather an example of how you can be able to tackle this. Alternatively, you've already been working in a particular industry, you have the experience and have some savings committed. So then you can start your business with part of these particular savings. Or you have funds from friends and family who support your idea and believe in you as a person, not even necessarily the business, but believe in you as a person. So there's a key saying that when starting a business, there are only three types of people who will come in to fund you: friend, family, and fools. So in these first two key instances, the friends and family, these are people who directly believe in you and not necessarily your idea, and trust you with the cash, and in some instances even don't want a return for the cash they've given you. And the fools, these are people in this notation, people who are more or less gamblers and are willing to give out their money to anyone who hasn't proved themselves. Next from there, the next available source of funding you have is debt. Debt is usually a very tricky one. So for debt, first understand the motivations of the person issuing debt. The person issuing debt is mainly in the business of earning interest from the cash loaned out. So for them, the first thing they consider is the risk of this capital. So when they're giving you this money, they try to give the money to someone who is low risk, and they'll be able to repay their money with the interest. And in the event that they fail to repay, they have a collateral which can be sold to cover this particular loan which was issued. And for debt, we have what is referred to as the 5 C's of debt. So it's clear for you to have a clear understanding, you need to go through this, and also provide a link to a video where I will offer more description or more insights towards the 5 C's of credit. After that, you have equity. So for equity, this is person who gives you money and takes an ownership share in your business. So this is a high risky venture which entails you receiving capital and the expectation of you delivering superior returns to the person who has given you this capital. So in that sense, it means that instead of this person investing the money in a safer investment, they're willing to give you, and they believe that you'll provide a higher returns for this particular cash. And for this, you have individuals such as angel investors, venture capital funds, and venture studios, which can also incorporate startups. And for you to also have a clear understanding of this, I'll also provide a separate link towards this equity financing. And also for business owners, there's also a level where you can list your company to the public market through an IPO. Now, this is generally now the last stage where you've grown up to a particular scale, and for you to acquire more capital, you need to sell some of your ownership rights to the public. And this also involves a long process and a lot of regulations for you to go through this. And also another key source of funding, which is ignored and overlooked a lot by business owners, is grants. So grants, these are funds which you receive from organizations and government institutions where you're given money to support you grow your business, and there's no expectation in terms of equity ownership or repayment. So for you to be aware of this, you need to first learn your market and available opportunities. So firstly, within the Kenyan market, we have government bodies such as MSEA, which is the Micro and Small Enterprise Authority. So once you go there, they have programs running annually, or even sometimes programs are running as short as 1 month. So once you're on board on these programs, you get access to this funding. And personally, I once took advantage of this opportunity. There was a World Bank program referred to as Mbele na Biz. So it was a business plan competition where individuals were either getting 900,000 Kenya shillings or 3.6 million as a grant. So it was a tedious process, but at the end of it all, 700 applicants were able to receive funding. So a key insight, if you're starting your own business, familiarize yourself with available grants within your market and the industry. And this is usually tasked on you as the business owner, since these grants, no one will come knocking on your door telling you about the availability or how they work. So it's for you as a business owner to actively pursue them and look for these opportunities on a regular basis, and also network with similar like-minded business owners within your industry.